Hi, I'm Garth McKenzie from traderscorner.co.za, and this is your weekly look at the S&P 500 and the Nasdaq indices. So as usual, we start with the S&P 500, and we're going to take a look at the daily chart here. So if we have a look, last week I mentioned that the market looked as if it was getting rather frothy. We also cited the VIX index, which was beginning to flash a red warning light. The VIX was picking up whilst the market was also picking up, and that divergence was quite unusual to see. And it did suggest that there was a possibility that the market could come off a little bit from those very overbought levels. And that's exactly what we saw into the end of last week. We saw a very sharp sell-off on the S&P 500. It was led by the tech sector. And we saw that market coming off quite sharply, more than 5% over the two-day period of Friday and Thursday last week. Obviously, this week, Monday was a public holiday. So we start the new week on a Tuesday in New York. And from a technical perspective, what's interesting to note is that that sell-off that we saw last week hasn't really made any massive difference to the technical structure. What it's really done is it's allowed that market to pull back to what was previously the high that we saw in February. That previous high was at around about 3,400. And you can see the S&P 500 rallied out through that area and has pulled back into that area around 3,400 and just a little bit below. The uptrend from April is actually still intact and it's still being defended. So all in all, it does look as if this market the bull market is still intact. But my sense is that the sell-off that we saw last week is probably the beginning of some consolidation that may yet last a few more weeks. Now, if we zoom in and look at the hourly chart of the S&P 500, this gives us quite a lot more interesting insight into what's happened lately. There's a couple of gaps on this chart, which I think are really worth pointing out. First of all, you can see there was a breakaway gap in the middle of August, and that was when the market pushed out through 3,400 and basically when it broke out above that previous high from February this year. The market then pushed higher. You can see an exhaustion gap into last week, and that was where the steepness of this rising trend just became steeper and steeper. And often when you see that, you see an exhaustion gap after a very steep move to the upside. It is an indication that that rising trend is about to come to an end. And that's exactly what we saw here. The market then gapped down into Thursday of last week, and that gap has still been unfilled. And you can see the move down from about 35.80 all the way down to around about 33.50 on the S&P 500. The market has found some stability now and it seems to be bouncing. But I think what we need to watch for in the weeks ahead is a move up into that area between the 50% retracement and the 61.8% retracement. So that comes in at around about 34.70 up to about 3,500. And that's what we term the ambush zone. And I think if the market gets up into that region, that's where one could possibly look for the market to stall and then take another leg to the downside as this consolidation unfolds. Let's then take a look at the Nasdaq, and here we start with a look at the daily chart. And again, you can see that this linear upward trend of the last couple of months does still remain very much intact. Notwithstanding the fact that we saw quite an aggressive sell-off into the end of last week, the market does seem to have found buying interest at around about 11,200, where the uptrend comes in, and thus far that is holding. If we then zoom in and take a look at the hourly chart of the Nasdaq, here you can see it more clearly. The breakout that occurred in middle of August through about 11,300 was a bullish break, but the market saw a very sharp sell-off into the end of last week, and that basically saw a retest of that 11,300 area where the market had previously broken out. Also note the breakdown gap that occurred last week on Thursday. And that's quite significant from a technical perspective. And that's what suggests to me that this big rally that we've seen over the last number of months is probably now due for some consolidation and probably a bit of a stalling of this overall upward momentum. Again, look at where the 50% retracement and the 61.8% retracements are on the Nasdaq. I suspect we see the market pushing up into that area, perhaps up to about 12,000. And from there, one would expect that that's your ambush zone where some selling pressure might then come in. And perhaps we see this consolidation begin to continue from that level onwards. That's all I've got for you this week. I'll be back again next week with another look at the S&P 500 and the Nasdaq indices.